Imagine you have a debt that's so big it's almost impossible to even think about. So what do? Do you go the painful route, raising taxes, cutting spending? Or do you dust off a radical, almost unthinkable solution from a totally different era? Well, today we are diving deep into America's massive debt dilemma and the wild playbook some people are considering to solve it. Okay, first, let's just look at the number. $37 trillion. That is the current US national debt. It's a number so huge it almost feels fake, right? But believe me, the consequences of this number are very, very real. And this isn't just some hypothetical problem for economists to debate. The folks inside this very building, the ones who are actually in charge of the country's finances, they're the ones sounding the alarm. This is about the very foundation of our economic stability. Now, what's so important about this quote is who it's from. This isn't some political talking point. The Government Accountability Office, they're the country's top auditor, they're nonpartisan, and their verdict is crystal clear. The road we're on is completely unsustainable. So that leaves us with the multi-trillion-dollar question. The obvious answers, raise taxes, slash spending, good luck getting those passed. They're politically radioactive. And that is exactly why some policymakers are looking at a much older and way more controversial tool from the economic playbook. And that tool? It's inflation. You've definitely heard this phrase kicked around a lot lately. But what does it actually mean to inflate away the debt? And could it even make a dent in a number this big? The basic idea here is actually pretty simple. The government borrows valuable, powerful dollars today. Then, years from now, it pays back that debt using dollars that are worth a whole lot less. You're basically devaluing your own currency to make your debt cheaper to pay off. Now, for institutions like the Treasury and the Federal Reserve, this strategy is a terrifying high-wire act. They have to walk this incredibly fine line because if they get it wrong, well, the consequences could be absolutely catastrophic. It is a really, really dangerous game to play. And you can see the dilemma right here on this slide. On one side, you've got the appeal for politicians. It's a hidden tax, right? A way to deal with the debt without anyone having to vote for unpopular laws. But on the other side is this massive risk. If inflation spirals out of control, it can completely wipe out savings, make it way more expensive to borrow in the future, and just destroy public faith in the dollar. But here is the major catch, the big problem with this plan for the US. Most of our debt is short-term. That means it has to be repaid pretty quickly. So for inflation to really make a dent, you need crazy high inflation for a very, very long time. By the time that high inflation really got going, most of that old debt would already be paid off. It's just not a silver bullet. So, if that's not going to work, what's left? This brings us to a much more dramatic and historically powerful option. One that doesn't just chip away at the debt, but could create a massive financial windfall, literally overnight. Okay, let's talk about gold. The United States has the biggest official gold reserve on the entire planet. But here's the incredible part, this secret that's just hiding in plain sight. On the government's official books, all that gold is valued at a price from 1973. Just look at this difference. It's staggering. Officially, our gold is worth about $11 billion. But in the real world, at today's market price, it's worth over $8 trillion. That is a $1 trillion asset just sitting there, completely undervalued on the national balance sheet. And before you dismiss this as some kind of fantasy, you have to know, the US has done this before. In 1933, FDR revalued gold to fight the Great Depression. He effectively devalued the dollar to get the economy moving again. So the power to reprice the nation's gold is a tool that has been used before in times of crisis. So, how does this magic trick actually work? It's really all just accounting. Step 1, the Treasury, with just the stroke of a pen, reprices its gold to the market value. Bam. Step 2, that instantly adds about $1 trillion to the asset side of its balance sheet. And here's the crucial third step. This paper gain can then be used to create new money, giving the government a huge cash infusion without selling a single ounce of gold or issuing any new debt. $1 trillion is a lot of money, and it opens up some really fascinating and very modern possibilities. And this is where the old world of physical gold collides with the new world of digital assets. And that digital asset is, you probably guessed it, Bitcoin. Now, if you'd said a few years ago that a major world power would consider buying Bitcoin for its national reserves, you would have been laughed out of the room. Today, it's a serious topic of discussion.
And this isn't just me speculating. There have been actual proposals in the US that explicitly link a gold revaluation directly to creating a strategic Bitcoin reserve. The logic is simple. Use the windfall from an old world asset to buy a big stake in a new world one.
So, why on earth would a government make such a bold move? Well, when you break it down, the strategic reasons are pretty compelling. You've got absolute scarcity, only 21 million ever in a world where governments can print unlimited money. It has a track record as a powerful hedge against that very inflation. It's a truly sovereign asset that can't be frozen or sanctioned. And for a country like the US, it would be a huge signal of leadership in the new digital economy.
Okay, we have just covered some massive, potentially world-changing ideas. We've gone from a debt crisis to inflating the currency to revaluing gold and even buying Bitcoin. So let's bring all this home. What could this great monetary gamble actually mean for you and for your portfolio?
Understanding how different assets might react in a crazy scenario like this is absolutely key. Nothing would be untouched, but the impacts would be really, really different across the board.
All right, let's try to break down how different assets might play out in a reset scenario like this. The US dollar, it would probably weaken because revaluing gold is basically a devaluation of the currency against it. Gold, the classic safe haven, would almost certainly strengthen as people flock to safety. Stocks, they'd be in for a super volatile ride, probably a big panic sell at first. And Bitcoin, it could see a similar initial dip, but a government buying it would be the ultimate validation, potentially triggering a massive surge as it becomes legitimized as digital gold.
Ultimately, the decisions made in rooms that look just like this, they aren't just abstract economic policy. They have profound, real-world consequences for every single person who holds dollars, owns assets, or just participates in the global economy.
So for you, the investor, it really comes down to understanding these two very different roles. Think of gold as your insurance policy. It's the proven, time-tested hedge against financial disaster. Bitcoin, on the other hand, is more like a high-stakes bet on the future. It's a high-risk, high-reward play that could pay off spectacularly if it becomes a globally recognized reserve asset.
And that really brings us to the final thought. These potential resets are chaotic, they're unpredictable, but with that chaos comes incredible opportunity. And maybe, in a world that's going through such a profound change, the biggest risk of all is not having a stake in both. Not owning a piece of the old financial system's bedrock and the disruptive potential of the new one.